Hello and welcome to the show. It's nice to see you. Nice. This is the GME Patreon and member stream. Thanks very much for supporting the channel. We're going to do the technical analysis on GME ahead of the split, which is happening super soon now, chaps, ladies and gentlemen. Hello, everybody in the chat box. I'm going to look at the charts. We've got the earnings call later today. Of course, Rocky and I will each be online at the time doing our public service. We have that earnings call coming up. There'll be lots of different analysts that have got lots of different opinions. GME have, for 3 or 4 earnings calls in a row now, been investing in a growth-based business plan. All of their objectives come from the idea of investing. They've also had to manage what has been quite a predictable logistics issue, which lots of consumer electronics companies have suffered during those periods of tightenings and congestion. And so anywho, we expect earnings to not be in line with the way people would be like, an analyst might be drawing them out in terms of like what this will look like for regards to an institution, or how that would work with regards to passive income, or, they've got a particular slant on the way they present their information. So we already know, though, that the ballpark figures that we're looking to see is earnings per share of, it would be great if it was no less than -$2, right? And if revenue was around 1.25 billion, right, that'd be decent, right? Any more than that would be good, because we don't expect it to be the biggest quarter of the year. Anywho, so we don't expect it to be the biggest results at this particular point in time, though there will be lots of information, partly because GME's methods of growth and some of its business objectives are achieved via partnerships. As such, there is some news there that we'll be seeing and listening to and reacting to as it happens. And talking about reacting to things, here's the charts. This is GME pre-market. As you can see, we're at 123.49. That's down 1% on the close from yesterday, which was down, the guts of 10%. Let's turn on the regular trading hours. Do a quick look at this technical analysis there. Daily time frame. Price action back down here into the previous 1618 extension. Slipped below that 50 simple period moving average. We've got a little bit of a wick, and then that touched off around the 236. Price action came back up for the close. And you can see on this time frame and on the hourly, it's even clearer, this little channel that price action's in here, with the potential for a bull flag if it does move to the top side. That would come in confluence with the test of the 200 period moving average being a third touch on the bottom. You see you've got 1, 2, 3 touches on the top, so this is currently a valid trend line, and underneath you've got one, potentially you could call that debatably, that you people would say it's already 2.5 to 3. But I'd like to see a third touch, preferably with a wick down to the 200 period moving average on the early time frame as the 50 simple crosses, that golden cross on the 1 hour time frame being confluent with a test of support within this channel, and that 200 period moving average test having gone through it and confirm a trend to the top side on this shorter leg of price action, right? That 200 period moving average being a proxy for the trend. And hourly is the first significant time frame that I think you can do that with any degree of reliability. Well, I can, anywho. Don't know about you. So here's this potential flag. It's obviously a channel. How it evolves will have implications for your own technical analysis. The measured move from within this channel takes you up towards 236 and the previous pivot high within the formation. So it all makes sense that, you could see an implied target from here that didn't break the previous highs, and that come off the back of some sort of positive inflection. That might be breaking the basis line here, might have already put in a low. You can see that this, there's 2 lows here. That, constitutes a third touch of a lower area, just higher than the potential it could have gone to based on the formation. But, it doesn't give you a trading signal in that sense. So if it happens, good for you if you've already got shares. If you're looking for a buy to add to your position or trading a different instrument or whatever, which a lot of different people are, or looking to buy this before the split, then you got patience and you don't mind missing out, which the best traders that would make the best trades, obviously, have got that sort of opinion and that sort of attitude. So you're looking, maybe you're looking for these testing around $112, perhaps as far down as 110, and then we know there's historical level of resistance at 109 and 108 and change. So you might get wicks to those areas and body closes above 200s, or body closes still within this channel, or perhaps your price action doesn't even slip without it and you get a test of 115, which would be the 1618 area that you went through on the way up, this from the Fibonacci that broke to the top side that defined this formation here, this little tightening wedge, which was like, a very sloppy, potentially described as a inverted head and shoulders, though it wasn't actually, right? It didn't match up anywhere. It was just a potential trend inflection. So anyway, back inside that channel and you moved to the top side, having tested support and it held, you went up and tested resistance. That was a golden pocket retracement and a 236 of a larger Fibonacci, and it reached a pivot point within this previous formation, this downward sloping channel that we were in for a long time there, since the end of March. And that all of that persists within a greater channel in the 4-hour time frame. You can see it's been in here since our highs, and then subsequent retests of those areas in around June last year. So it's a year of price action has been conforming to expectations that are derived from this chart formation, namely a descending channel on 4-hour time frame. Within that, we've got lots of other things to look at. You can see here the Bollinger Bands getting two potential signals. The expansion here, you see Bollinger Bands will expand, and then at that point, when they're expanding, they're divergent. When they're contracting, they're coming together again. There's another signal. So you got to pay attention to these things, and you could also be looking at chart formations within this overall formation, or you look at moving average strategies, or you look at Fibonacci strategies, or you look at momentum, which we do all of, and then we apply volume on top of it to confirm or deny our trends. And we can say that price action here, we've had confirmation at the start of the move, volume pushing price action up to the top. This signature we had before, similar here. We haven't yet had anything that could be described as people taking profit or liquidity leaving the market. At this stage, you could have seen a potential for that. But obviously, I haven't had any time for this yet, nor has price action tested the top side of this formation, where that might come into play. Here was the previous break of volume, and it took a long time for that trend to break down and get confirmation that maybe it had with the volume, especially 1-2 touches of it, three instances. And here it all came near the beginning. Price action broke out of that formation. I described this as a different signature. But then you had the start of this trend, and you haven't had anything yet ending yet. You had clear examples of how it ends twice. And we haven't yet peaked necessarily yet on this move. So we'll see how that goes. Though again, you do have cautionary tale by this potential, right, and the liquidity and the changing and everything that's coming up over the next wee while. So 4-hour time frame, where did we start? We started on the daily. Back to say hello to the chat box. Hello, chat box. How are you all doing? So we're on the daily time frame here, and we can see the RSI is pushed above the center line. It's above its own moving average, and that's positive. You need to be there if you're looking for a positive trend. That's happened as we're above the basis line of this channel. So those are two positive aspects that you might be using to define price action using this framework. You're below the 200 period moving average and have found resistance at it. And as we said earlier, it's a proxy for trend. And that's a daily time frame. Price action, you can see it was above it for a significant period of time, at which point we were putting in only higher lows. Subsequently, we peaked at this point. Price action taken out of the bullish control zone, lost the center line of RSI as we lost the 200 period moving average, started putting in lower lows. Subsequently, we've put in one breakout high here above previous horizontals, but not defeating this overall trend, the trend that's persisted, as we say, since June of last year. So an inflection point possibly. Subsequent to this move, we had a second test of this low. It wasn't the low of the overall channel wasn't as low as it could have potentially been. At that stage, we were in the bearish control zone, and we put in this breakdown formation. We recovered back into our previous formation, this downward sloping channel, which I could emphasize by extending that line rather than moving it. Here, buddy. So we broke back into that formation, and then when you managed to hold support, you broke through resistance. Subsequently, that was so close to the basis line, you went above it. 200 period moving average is where you're going if you break the 50 simple, where you also see that we found a little bit of a pause. So we went through the center line RSI. That's good to see. And having put in this inflection point with a potential double bottom, RSI suggesting that there's a reason for it to turn around, though not necessarily the momentum for it to break the trend. The MACD crossed. You're below the 200 period moving average. Histogram went positive. You didn't have any divergence in that sense. So convergent with the overall trend. Nothing saying that it's going to break, within our expectations, and everything that was talking about signatures and signals that you've been given throughout it, they've persisted to conform with price action and the pattern that we've seen. So if that doesn't change, it's hard to say the trend itself isn't going to change, unless you get some artifact that you can definitively say this is different. And being above the 200 period on the daily time frame at this stage would also take you above this downward sloping formation, this channel. So something different would be happening. And to move to the top side, you might have a measured move that would be coming from like the breadth of the channel itself, depending where you break out from this thing. These are going to be adjusted charts after the split, which we can talk about, but and the things will have implications for what we're doing here. But this and it's a log chart and whatnot, so we will touch back on that. But this would be the measured move and the implied target from this channel, and you would also be then looking to previous pivot points within it into about $240, and then the next high up at around 350, 343, which is where this thing might take you if you break out. Whoops-a-daisy. As that would be beyond the golden pocket and around that 240 level, which would be also an extension from this previous Fibonacci. So that would be the target if you were to go there, today, now, boom, bam, crazy moves, then you'd be looking up at that to put 240. But I don't anticipate that happening. Momentum's turned around on this time frame. You can see bearish at the bottom of the bullish control zone. Blah, 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 blah. And you want it to hold the center line, having gone through it, putting in a good test. If that happens as the MACD is passing through the center line, the signal line, doing something similar, great to see that. Doesn't necessarily define the trends changing, but you might come back up and test that 200 again, up at 150, which would be great to see. But it doesn't look like we're about to experience in that, unless it's due to, market dynamics, due to the corporate action that's coming up within a matter of hours. But if you're looking at the charts and you're saying, well, what's momentum been like? And you'd say, well, we've got this test of the center line. That's what we're looking to on the daily time frame. Apart from that, open up the average true range. You can see volatility pushing to the top side. So if you did make a sharp move, the conditions are there for it. It could come down and have a big range, test the entirety of price action's range, which has been up here, and extend that volatility again. That'd be interesting to see. And, it's got the conditions where things could go a little bit crazy. Drop down to the 4-hour time frame, got this cross through the center line, the MACD. You've gone through the center line, RSI, and held your own moving average. That's not necessarily something, right? That isn't like whatever. It's not a trading signal in my book. You've still got this bull flag potentially here. The 200 period moving average providing support at the minute. The 50 simple is down at 109 and change. That's where the basis line of the Bollinger Band comes in. It may well be now that you've slipped back within the top side of that Bollinger Band, having extended without it. You see you got a rejection the next time, right? You came outside the Bollinger Band, large wick, price action rested out it, right? Close outside, outside the outer, open close outside the outer Bollinger Band, led to another move to the top side, at which point you had a reaction, price action came back down within the Bollinger Bands. Then when you had a definitive open and close within it, you'd likely come back and test the basis line, right? And because of the signature you've been given by the expansion and then subsequent contraction at that third touch of this downward sloping resistance line, it may well be now that you expect to see that move from those two signals that are given off by that particular trading strategy. Here's you've got your bull flag, which kind of flies in the face of that idea. that you would get a test here unless it was to be extended. And then on the 4-hour time frame, that speaks to continuation over a time period that isn't available to it due to a corporate action. And then you'd go back to the ATR and say in a 4-hour time frame, you've broken this trend, right? The range here in terms of horizontals, you're back above it and you're doing the sort of thing that could go up to, like, you know, your average true range could change to 1496 from 1139, which is itself an increase of 3, which it's of, like, you know, speaking to an increase then of about a third in that type of, so you would add that on to what the range here, right? So price action doing something like 121 to 137, cool, right? That's 16, 17 bucks. You make that 20 plus. If you were to do that from now, you'd be looking up at that 150 target and testing that previous level of resistance, even up that 236 top side of this channel. That's all possible, right? But it would be due to, like, if it was going to happen, it would likely happen like quite quick, is what we're saying there, rather than following the formation and the trend and this march that we've been on for a while. Until 4-hour time frame dropping down to 2-hour. What does the momentum look like? I mean, this is nice, clear price action here on the charts where you can see that expansion in the Bollinger Bands and the contraction then looking a little bit smoother. You can see that price action previously tested lows that was within this formation back way above the Bollinger Band, held it for a while, the basis line there. Contraction until such times as the squeeze led to this move to the top side. The nature of this contraction suggests that if it did come in at the basis line, you would get a good test on the 2-hour time frame that is here in at around 117.12, which would constitute another test and a third low within this bull flag. And that could be enough for price action to go on 117, especially if it's making a move up to 150, which would be like a very, very big range then. An increase in ATR and extension of that trend. On the 1-hour time frame, got 2 minutes until market opens and haven't yet looked at SPY. You're below the baseline of the channel. We're above the 50 and 200 period moving average. You're looking for that golden cross in the test. We've already done the 1-hour, 30-minute time frame. Do you have the momentum on your side at the minute? You're coming in for a potential cross. You need to price action to push down a little bit more. This is a little bit counterintuitive now, but I would actually love to see price action push down to 109 during the opening range and then recover back to 120. And then by the end of the day, maybe you get crazy good moves. You get in the start of a potential signal here. You need price action to come down, but not desperately, only enough to be even like only enough so that you get a valid cross in the MACD here, while you're then also potentially not getting rejected from the center line, the RSI. So this is close, right? It could break down and it could go further. You could see down at 110 or lower, right? 117. Markets are just opened. Yeah, darn, right? It looks like we're getting, so the volatility this first period of the day, 122.91, dropped down to the 15-minute time frame, 5 minutes. Spread out a little bit here. Opened down on the basis line of the Bollinger Band here. I anticipate prices coming back below. You've had a move to the top side, which has been a wick so far on this 15-minute time frame in order to close that gap. So it's no there. There is no bad mudda. People follow into rules. There's the lower Bollinger Band at 120. Price action moving up at the start of this 15-minute period. Very interesting. Look, your candle here is already a larger range than the 15-minute candles that we saw throughout the price action yesterday. And then that speaks to the average true range increasing, which we likely see on this 15-minute pointing to the top side. There we go. This is a bigger range on this 15-minute candle than you've seen on any of the 15-minute candles yesterday. You'd have to go back to, well, wait a minute, when was that? There it was. Maybe this one here, 10 past 3. Or this one here, at 10:23. You know, maybe. Anywho, whatever. So am I on the regular trading hours? I am. Excellent. And a little bit of a rejection from 124 was 50. I'm still in it, right? So we'll see. And then I wanted to just quickly check SPY, right? A gap up to the top side of the Bollinger Band, 15-minute time frame. Volume coming in at close yesterday. This is interesting. Average range picking up, cross on the MACD. That's all very tradable there. 5-minute time frame above the 200-minute average. You should be looking for the top test of the Bollinger Band. Got it straight away open. Then you'd be looking for a move to 416.50 and then take it onto the 1 hour time frame. Looking left, if you do go further, it's 420. And really you're aiming for 430. If you get 430 today on SPY, that's going to be really good news for GME. Is it possible on VIX? VIX, so volatility moved top side, closed that gap. Wicks there. 200 period moving average. You've had a cross below on 5, 15, 1 hour, 30 minutes with 30 minutes saying, you'll tell me 15 minutes. Shit, fuck you. Sorry, me language there. VIX is saying like, hey, there's a flash on the 15-minute time frame. Great, I knew you'd do it for me. 15 minutes. We're close to covering this 50 simple. And then we'd aim for the 200 period moving average, the high we hit in yesterday at 28.25. That would be like great if volatility did, came back down to fill that gap. That's already like calling 2 gaps here if you look left. So they haven't done that. It gives us a reason to go to the top side. You've got this potential cross on the 15-minute time frame. You're potentially looking to get above the center line and RSI there, so that looks good. 30-minute time frame, you're below the 200 period moving average again, so it limits how much you might expect to get from this. And it may well be that this is following a select downtrend now, having met these resistance levels. Let's see if it manages to go, this was extended beyond that formation, managed to drop back in it again. 2 hour. If a flash down at 21.43, this looks to be rolling over, triple top, divergent throughout it. But also then you do have this downward sloping area where price action could come back to in the top side of the Bollinger Bands, and you've reacted having tested the bottom side. So if you get above the basis line, recover this 236, this is where they find a basis line now at around 27.63, then you could see a move back up easy 28.40, and then if everything goes crazy up to 28.30, 28 or 30. But I'm not seeing that right yet, despite the fact that VIX SPY opened up with a gap. Don't want you, sorry mate, bye. That's the right key. And you're in the bullish control zone there on 2 hour time frame, still 30-minute on SPY, pushing the top side of the Bollinger Bands. Interesting, but this is falling out of the bullish control zone. It looks like a potential swing failure on SPY. Low side of this 200 period moving average, about at 400 again, test 400 again by end of the week. Totally possible, right? Totally possible. GME, 30-minute time frame. You wanted price. I wanted price action to come back down a little bit in the 30-minute time frame, test this lower side of the formation, and at the same time below the center line of the MACD, which you're getting now. The average true range is dropping as this is happening, so I don't necessarily expect it to break, even though we had a positive 30-minute candle to start off with there. Rejection. It wasn't 30 minutes. It's still is happening. So we'll see, right? That 15-minute was quite a large range. 30-minute, let's see if this is starting to turn to the top side. Maybe this does break down a little bit further. I wanted that to happen to give us a potential entry signal on the MACD, but I didn't want it to happen while at the same time giving us a sell signal on the RSI. The 200 period moving average is so significantly far away that I don't want any particular negative signals right now, because that might lead to a test of that on that 30-minute. On the early time frame, it doesn't look as bad in at 113. On 30-minute time frame, down at 101. That would defeat the structural integrity of this flag and whatnot. So we don't really want to see it break down on the 30-minute time frame. So we really don't want any sell signals here. And the MACD crossing below the center line, that was from a sell signal we had at the initial peak on price action here. So like that's what's momentum which defines this flag. So we've had enough of that now, right? You've got a potential, right? This is like close enough is near enough, and if you recognize that, you'll always have enough. Come on, GME, turn around to the top side now, you freaking. Anyway, if it doesn't, we don't want it breaking down in 30-minute. On 50-minute time frame, it's better, right? That's much better, right? We'll just pretend 30-minute doesn't exist. 15-minute time frame, got a potential cross there now. You've pushed towards the center line, got a knock off it, held your own moving average, try again. That's positive. That'll confluent with what we're looking for on the 30-minute. It's if you can go back to that, if the 15-minute keeps pushing above that center line RSI there, then we'll come back to the 30-minute because we'll be able to look at it again without being angry. And there's this downward sloping channel, 200 period moving average. Everything's okay there. hourly's holding the center line. That's confluent with that idea there. 2 hour period moving averages tell us you're lost the 200 period, darn it. 50 simple in at 105. If you can maintain within this formation for a while, maybe not even break above the 200, but test up at 129. 50 simple will make its way back above this golden pocket. And at that stage, you could see a third test of this downward sloping channel. So anywhere between 120 to 110 is a good area for a bounce. And the longer it takes for that to happen, the better. In advance of that, on lower term timeframes, we could see positive signals that might push price action to the top side of this channel. There's a lot of areas to break, so I don't anticipate it necessarily making a crazy breakout move to the top side. And SPY doesn't necessarily suggest that it's going to do that either. And despite it had a good open, and VIX there, well, I mean, that's been on for a while, that 2 hour flash. That's not going to dictate how I would look to this. The downward sloping formation on the hourly there, this supply line, it's not really supply, it's VIX, but 30 minutes, you filled that gap, and the previous one, gaps within gaps. This 200 period moving average, 50 simple below it, price action below all of them. Price action, VIX. Anywho, you're below center line RSI as well, and this is downward sloping formation. You're below 200 period moving average, and you're just about to get a sell signal on that MACD if it does push up a tiny bit more and then cross down, which you're at resistance now anyway, so you'd expect that volatility won't be increasing then. SPY is putting in that divergence, and it's putting in a potential swing failure, and then it's testing the 200 period moving average and 236. There's a number of different places. You can see I've got 1, 2, 3 drawn in. 200, 400, this is the next entry if you're looking for one. This is even better. D point, that's the breakdown area. You got close, but was it enough? This is a reaction, but is it a reversal? Right, you're looking for, like, if you get a double low here, you don't want to be holding that actually. Like, I did just this trade. You don't want to be holding that below there, and that's a healthy enough area. So, I mean, I wouldn't even take that. I'd look for that. Right, this is just in illustrative purposes, but like, you want a test of this low or a full on hit of that D for a real PRZ, and then a boom, bam, bam reversal rather than a reaction, which would be nice to see at the bottom of a trend with a double bottom and breakout like that. It would even look a little bit like a bump and run. Well, not really, but it'd be great to see. And the Bitcoin, it moved to the top side, a little bit of a positive reaction, is flirting between backwardization and contango there, as you can see, 31,757, 31,755 here on the futures. That's up to the minute data, so you know that it's correct. Bitcoin dominance 46.73, as we spoke about. This level 46 is important. Also looks to be putting in a little bit of a potential bull flag, but you can see there's bearish divergence between these highs. Is the trend changing? Well, you've tested the 200 period moving average and moved to the top side. I'd go a lot on the futures market here, and then at that stage I'd be looking at the 4 hour time frame and this overall formation where you've hit the top side a number of times. You're coming up to touch that again. What does that mean? Then I'd go back to Bitcoin dominance and look for where these retests could come in if it should break down. And what that would mean, well, it might mean a short-term move with double-digit percentage increases in various altcoins if that was to happen. But it's unusual that you would find Bitcoin dominance drop if Bitcoin was dropping. So then you go back to Bitcoin, you look at this formation and say, is it a bull flag? Is it resistance at the 200 period moving average there in the 4 hour on the daily time frame? Have we made it back into this sort of downward sloping supply line already, or is there a bit to go? You can see we're below the 50, which itself is below the 200 period, and then the RSI is below the center line. So you've not exactly turned this into something bullish yet. AMC then, down 3.84% on the day. You can see here on the daily time frame this broadening downward sloping formation with what we can see if we zoom in there. I'll just zoom in as it show up. There it is. It's a wow formation. You've got the first little bit of it there. Whipty-doopty. That was pretty darn accurate too. Up to 382 rejection. You want to hold this 236 at that stage. You maybe even wick a little bit below it. It will be very difficult for these candlesticks. So far, right, they've done very good at tracing my handwriting on the W. But they're going to be putting in like something that price action would literally, whoops, a daisy, never have done before if it was to create a zero circle here on the charts, because they only go from left to right. So if this was to happen, it would potentially have to involve gaps, lots of gaps, and a huge range, right? What we'd need to see in order for this well formation to work out completely and utterly perfectly would be candles that went like this, with candles up here, and then gaps underneath, and then a gap to the underneath, and then a gap to the top, and then a gap to the bottom, and then a gap to the... And as you can see, right, it will be very difficult for price action to conform to the perfect, beautiful handwriting that we've got here on charts, but it could well have conformed to these ranges where the 50 simple, that would be resistance so far. You might look to the 236 of the Fibonacci as support, or wicks below it within the formation here. You can see that there's other areas of support that it might test in a volatile period, which would look like, right, if you slip below a 236 and people panicked. You've seen what it's like in panic room. Jeepers creepers, it's fantastic fun, isn't it? I can't wait to get back there. Only a couple of days now. So today is Wednesday. Amazing. Tomorrow, Scotland are playing Ukraine, the World Cup qualifying match, which is going to be fantastic. We delayed it because Russia invaded Ukraine not so long ago. So Ukraine came to this agreement where probably we'll give a bit of a delay so that it was so it was a proper sporting competition, and that which is like, I think, a good decision. So now the game was rescheduled. Now we're going to be playing tomorrow. I think it's tomorrow. Scotland are playing Ukraine, which is great. Great, brilliant. It's a little bit conflicted as a Scotland fan, because I obviously want Scotland to pump whoever they're playing, but then it's Ukraine and you feel bad, right? You feel like, but then, right, it's only sport, and so like also we'll probably get pumped anyway. So it's just all about the fun and the friendship with the Ukrainians and us Scottish people, and expressing how happy we are with this newfound brotherhood of men and women, right? WOW here, right? Wow, it's incredible. Right, I want to talk about this, right? I want to talk about the actual TA here. So this is the RSI on the daily time frame pushing above the center line. That's super positive. You've got a cross on the MACD. That's super positive. You're way below the 200 period moving average, so you might not necessarily be able to use that as a trade-in signal. If you were using various other strategies, you might then put a dampener on it and say, well, you're unlikely to get above the 200 period moving average. The response at that point would be, yeah, but that's nearly 100% up where we are at the minute, so who cares? And the point then would be, well, yeah, that just speaks to how unlikely it would be you'd see that size of a move then, right? So the 50 simple in advance of that comes in at 1690. That's the top side of where the formation has got to at the minute. If you look left, you can see the horizontal resistance around 1608. That's even closer to where we were pointing our peak. And the 382 of this Fibonacci, that like even closer. So maybe you go on the Fibonacci strategy, start off with in the horizontals with support and resistance, perhaps the rough guide to that. And then, so we're saying the 236 or this little extension below, right? That's what we talked about earlier. The O formation, maybe that defines where the lows are in on that sort of thing. I mean, I'm not talking about whether or not that's going to happen. I'm talking about price action. You've got a potential buy signal at the minute. Price action is in an upward trend. You broke this horizontal level. That was the previous high within this range. If you were to draw this downward sloping resistance line on price action, you can see you found resistance here at this part of the trend. You came back down. At this stage, you'd started an uptrend on the RSI. So why not also see one on the price action? You came back up a higher high here. The next pivot point within the formation to test is here. That's confluent with the 382. That's why price action turned around there. You're looking for support at this stage, and then continuation. As a trader, you're looking for continuation. And having just seen a higher high with subsequent, previous to that, a higher low, you then look for another higher low, which anywhere around these areas would conform to that. Like we spoke about this 236, this pivot point below the big extension. If you were to draw a Fibonacci out of this and look for having breakthrough a 236 and then aim to a golden pocket and or 50% retracement and or a 382 holding that, if it even did break below the 236, in which case continuation at the top side. So far things looking okay. You've recovered some of that drop now at 167. That's good to see. Also GME is up 1.86% on the day, 127 and change. That's good to see things moving now. Drop down the time frames. On the daily, you're like I say, above the center line RSI, and you've got a positive signal, a buy signal on the MACD, but it's countered by the fact you're below 200 period moving average. But other time frames tell us you're above the 50 simple, so there's something to look to there. You've tested the bullish control zone, having gone through the center line. That's good to see. You've got your MACD cross pushing above the center line with the signal line taking it, and the histogram also in positive territory, and the ATR picking up slightly. So you can see that actually it's not, it's to the downside, but we've got a tiny little flick up there on the edge. Have we? Not yet on the 4 hour time frame. So momentum is with you on the 4 hour, 2 hour. You'd expect to see even more of that. Yeah, in the bullish control zone, and holding its whole moving average up there, having put in what I would constitute a test of the center line, having gone through this frickin' center line on the MACD at the same time, which gives you even more added confluence. And then you had that breakout move, the positive range. You've got a gap below that speaks to a little bit of dodginess down there. Has that been filled? No, it hasn't. Oh, look at that poor squashed head. That's brutal. So that's it, folks. Don't leave your friends on the train tracks. And then this is a 2 hour time frame here. Price action, quite big range on that so far. Low at 13.57, high at 14.32, pushing towards there at the minute. 2 hour time frame. You're in the bullish control zone. You've gone through the center line MACD. It's good to see. 1 hour. Right, this is a horizontal level that you would like to hold. You've worked below it, but only so far as the basis line, the Bollinger Bands, as we spoke about in GME. Good to see. This was our target before we got there. You know, support, then resistance turn support is what we love to see. We slipped below this area on the 1 hour time frame at 14.13. I don't like that. I don't want to see a body close below there, especially not back up on this 4 hour time frame now. What do I see that at? Well, now you've got different formation. You're speaking to the Fibonacci. I'm going to have to put this guy on and see what he says now. There's the 236, opening close below that, wicking at the 382. 236 of the previous Fibonacci coming in at the 50 simple. 1317, right? You've down at 1357 so far. If you go down again, you want to hold 1317. If you don't, it'll go down to 1213. That's what I'd expect to see AMC be doing on there. Down to the 1 hour time frame, you can see you're already putting in open close below the 236. 200 period moving average and basis line have been tested, but this isn't the sort of positive reaction that I would demand from my. So it's not. Come on, guys, do better than this. So you wanted to see it more enthusiastic, having tested 200 period moving average, like this sort of like range of a candle, which this was a rejection from the top side, having stretched outside of the Bollinger Bands and tested a Fibonacci level, and then we came back down and tested 200 period moving. Got a tiny little bit of a wick. Not enough to like, and then the body closes of the subsequent candle formation didn't take you above 50% of this rejection candle. So you come back down again. And at that stage, you're like, can we get a positive reaction? And we haven't really yet on the early time frame, despite the fact that this looks good and is a recovery from those lows. It's actually quite weak. And even though the momentum looked good, you can see you've now fallen out of the bullish control zone, lost your own moving average. You're even potentially bearishly divergent at this stage. Well, I mean, that would be like continuation divergence. We're seeing it to uptrend looking underneath as well, so it's all right. It's a bit of it, but then, you know, there's nothing's really defined yet, especially because you're not really even going through 236s. Never mind on the other way, so can't really actually make that call there on early. But you know, the momentum was doing better on the higher time frames. You would like to see some sort of positive reaction from this 200 period moving average. As I say, that would come in and push the RSI back into the bullish control zone now, and that would look very bullish at this stage. You break above the 236 subsequently, I'd be looking for higher highs on the day. In a phone call now. Pardon me, 2 seconds. Hello. There's the bank. I like watching a horse race. Oh, I like watching a horse race. So, Yes, 1 hour time frame. This is not as good as I'd like to see. I wanted more from you guys. I wanted more from you. There's falling through the. Okay, great. So we're going to go back on GME where there's something interesting. There's a rejection wick on the top side of that. It's not great. Top side of the Bollinger Band, which is its upside target. You've held the basis line. It goes straight to the top side. Good. Don't now want to see it close below the basis line. That would be a rejection. So far, it's positive. Like it. It's like watching a horse race, not I like watching horse race. No, I like lamp. I like the shadow cover. Are we talking about the shadow cover on the on candlestick here? What? Ah, no. Says it was changed to 1 p.m. on my TV. What was changed to 1 p.m.? What happened? I hope not dreary ruin, but I'm prepared for anything except boring. Okay, right, cool. It's like listening to a horse race. I like listening to horse races. I like turtles. I like turtle races. Right, great. So we're here. Are we all working? 13 concurrent viewers. Chat rate 0. Does that mean that is it working? Is it working? Do people hear me? I thought I muted things when I was on the telephone. Now I don't know if I've unmuted things. So I don't know. Maybe I'm muted. Maybe I'm not muted. Who knows? Hello, AV80. How are you doing? It goes to Dan Ernst. Working for me, loud and clear. Dan, you big fanny. Dan, you huge fanny. I can't hear you. Ha, Generation Ape is such a huge fanny. He's the biggest fanny in the world. I listening to Jimmy. I like it too. Ha, Generation Get You can't hear us because he's such a huge fanny. Loud and clear. Komodo Dosh, how's it going? Okay, oh, great, excellent. All 13 of us. Right, this is now very much a rejection wick. So it holds the basis line, then we've got like something positive to hold on to. But otherwise, that's like a... that's like not something we wanted to see there. What was the top side move? 129.83. Look, so just went to the target. Was there Moon Man? Yo, there's a space monkey level up. Right, what's the time? 10 to 10. It's 10 to 10 somewhere. That's now a negative. That's not a negative candle, folks. Can you believe it did that to us? Can you believe that? Shocking. Yeah, right, that's brutal. What's it like on the 5-minute time frame? Look. Like, you know, that's majority of the candle's wick's not fantastic. Again, you're like asking it to do the extraordinary closing outside of the top Bollinger Band. It's done that recently, then that would be putting a significant amount of time outside the top Bollinger Band, which isn't the way these things work. It would lead to an expansion here, though. We see the bottom side turning down. That would naturally happen with this range being smaller than these big moves here at open. So, you know, hold the center line there on RSI. That's good to see. 15-minute time frame was where we were looking for price action not to get rejected from where was it actually? Where was it? We were hoping for it to push down a wee bit lower, but not get rejected from the center line. It wasn't here. 30 minutes was it? It was. We were avoiding the 30-minute because it was going to do something annoying, wasn't it? There's that. We've got this coming in now. Oh, look, it could come in. Could now get it. Come on. Right, go for it. Go for it. So the 30 minutes, but that was relying on the 15 minutes doing well, which is, you know, saw this rejection wick so far. So we'll see, right? It's closing soon anyway. We don't have to long to wait. 4 minutes 30. Let's chill out, guys. Let's chill out. 4 minutes 30. What am I going to do for 4 minutes 30? Coco's just behind the blinds there, sitting in her cardboard box looking out the window. It's great. So I suppose if I wanted to cheat, the chat rate is now 4. It was 0, which is incredibly high. I suppose I was just like, oh no, the microphone's broken. Oh, is it working? And then people chatting and I'll be like, stats are going up. Whoa, stats amazing. Whoa. Woo. Something. So what else? Does this look like a positive formation? No, you were hoping for more actually. You know, it's the bottom of this leg. You're not looking for, it's just conforming to the structure that we're talking about with the bull flag. So we'll go back to the hourly and look at that and see, boom, yeah, it's still all like that. 30 minutes, you could draw different things. Like you could potentially say, is it looking like it's going to form a tightening formation? Could well do, you know, especially if you're taking the wick in at the top side of this, right? You need another touch to confirm that level. But in around here, you know, you could say that there's like a question as to whether or not this is a descending and tightening wedge, in which case you would be looking for a breakout to the top side. You'd also then be doing something similar to the channel, but at this stage it would define like where there could potentially be an apex, and then that might lead to like breakouts or whatever. And in this sense, you could be a bit more extreme because it's lower time frames. So like cut off some of the lows and wicks and whatnot, and look for like closes on higher time frames. Though in that stage, you would be really looking for a channel. Then maybe you find it in around, where is that? 7, half 7. Maybe. Me too. I speak Scottish now as well. Congratulations, Jamie. Are you streaming earnings? I'm streaming them all over the place. Wobble, wobble, wobble. Or look, now you're covered in them, including cussing. Talking about, there's nothing like that over here. You know yourself, it's a family show, LG. Co. Yes. So, yeah, so fantastic, right? Fantastic. We were waiting for price action to catch up with us. It didn't manage to do that. 121 spot 25 is low. 129 spot 59 is the high. So this top side is the 50 simple period moving average. Down at this low where price action could come into some sort of a wick if it breaks out of this formation to the downside. The range within this formation is similar to the range that would take you to that 200 period moving average. And you've not got all that much to go to if you break through like the downward sloping formation that this thing's created for itself. Other than that, sure, there's the Fibonacci extensions and whatnot, but most of them were targets from below. And sure, they're valid places to find support, but you've not tested that from the top side yet. You have done it here before you broke out at the extension on the move, and the top side of the flag. And that may well be where you find confluence with the lower side then of the flag, which again coming in at around 7:30 would definitely take you in at around those levels. 7:30 in the evening, this is the market times here. The market time 7:30 in the evenings. This is my evenings, my market. Tradespotting, my chart says you're a Raj. No, my chart say you're a range. I'm a range? Raj, yes, Raj. Oh, your chart say I'm a Raj. Oh my God, question mark, exclamation mark, Tradespotting's a Raj. No, I'm a perfectly nice, respectable gentleman. But you're the Raj, Reese, you lunatic. How are you doing? You getting any sleep? You getting any sleep in between everything else you're doing, Reese? You must be going mad. So, yes, Tradespotting's not right. Tradespotting's a lovely, lovely boy. He's a lovely, lovely boy. There's this candle trying to make its mind up. It's still got 14 seconds. Right, cool. That's good to see. Yes, moves. This is very good, yes. If you get above, even better if you get above 127. Go do that, even better. Nope, didn't do it. Didn't even fucking Right, so, it's still a rejection wick up that side. We'll see what price action does. If it does move to the top side, it's defined a nice little range for itself, where it likely finds a little bit of very congestion in top side. Slept on the floor last night next to me, ripping my office apart this long weekend to decorate, where I'll be digging my future trees. Nice, that's great, getting your old environment set up like that. That's nice. Good to hear, man. It's good. Love that sort of shit. I get jealous when people update their rooms and stuff. I'm like, no, I have to move my furniture around now, even though it's being a shit place. Just for a change. A change is as good as a rest. A rest is as good as a change. I like it as physical. Yeah, so we don't get rest, so we change. See what you're doing there, Reese. Good idea. So this candle is now not fabulous either. 15-minute time frame is not what we're looking for. We're looking for a positive so we can see our 30 minutes coming for a close. Instead, we're getting rejected to the center line. We're not getting our cross, and we don't want to see continuation to the downside. That wouldn't be fabulous. If it does, then we're back looking at the hourly again. We're speaking about this channel, and we're talking about these areas, and that's where price action likely goes anyway. If you're a trader, you're looking for continuation. You can see the wedge drawn in with there and the tightened information. You see the basis line of this channel, which likely has a greater effect on the closes of the candles as opposed to the range of where it goes to, right? The range will be dynamic based upon supply and demand and the elasticity of price in any given moment, along with the liquidity that's on the books in order to service those moves. But where the candle closes happen are determined largely by the market orders, i.e. traders bring prices to these levels at these times for a reason, because experienced traders, diligent traders, understand the mindset and the purpose, and they know that for every action there is a purpose, and they don't do it for no reason, right? And they're let the reason be money. That's that. Take that song, isn't it? No, E17. I don't know. I'm a big fan though, huge fan, one of the biggest. So the basis line here, information, is what I'd be looking at with regards to how they want you to think, perhaps, but how the market might react with regard to these dynamics. These are the dynamics that I pay attention to. So many freaking evil Egypts, right? I was watching the Radio Matt. Somebody sent me a clip of my stuff the other day, and I was watching something. They were asking me a question about something I said, but because I was trying to watch it, an advert came up, which I wasn't against, obviously. And the guy said, channels like these, and then went on to he personally insulted me in an advert on my channel. And I've been very angry since. I've been very, very angry since, which you can probably tell by this strange bubbling cam on my exterior. You're probably out there desperately worried, like, what's happened? And it is that. I saw that guy doing that. And I'm going to look him up on LinkedIn. I'm going to tell him what I fucking think of him. Fucking bastard. Fucker. Fucking bad. Anyway, this is not about that. This is a Patreon stream. Right. So price action, GME, we've covered it. We talked about it. So there's going to be a split, right? What that's going to mean is probably going to be 3-1, but hey, I'm open to whatever. If it's like 2-1 or less, then the way they would handle the change to option contracts and whatnot is a little bit different. You'd never be diluted, but when it's 2-1 or more, like 3-1 nearly guaranteed, the way that they change it is they just issue you with like 3 times as many option contracts along the same details, but they reduce the strike price by the equivalent, so i.e. a third. So if you have free option contracts, one option contract for GME for this Friday to expire price action would be about $100, right? Strike price. Then that would then update to be free contracts for free $33 this Friday, and then you're not diluted, and that's the way that would work, right? So that's the way that works. So with regards to the split, if it is 3-1, if it's more than that, then same story. People ask questions like, well, if I've got one and it's 3-1 split, does that mean my 1 then becomes 3, or does the 3-1 mean that it becomes 3 plus the 1 I already have, so I have 4? And it's no, you'll have 3, right? It's the 3 to the 1, so you'll have, right? And if it's 10, then you'll have 30, and if it's 100, you'll have 300, right? That's the way that works. Not, you won't have 30 and then get 300 and then 330 plus your original 30. That's not the way it works. Though I can understand the question, because, split via dividend means that you know exactly, right? So I understand the question, and where the logic of where you might be coming from to think it, but hopefully explaining that way will answer those questions. And what's the other question? There was 3 questions. Oh, earnings per share about GME. What do we expect? Right? Anything not like $2, anything like if it's less than negative $2 per share, that's not fantastic. But we want the revenues, what we're focusing on. It's like always, we don't actually care about earnings per share, especially if it's not positive. And we're getting our dividend from the share distribution. Anyway, so we're not looking for passive income for GME shares, right? I mean, maybe we are in future, but we're not right now. And the dividend mechanism is exciting and rewarding for entirely different reasons. And nor is it here to raise liquidity and whatnot and sell shares, nor is it for that either. It does make the options chain cheaper. And anyway, that's not the question. The question was, what are we looking for earnings per share? And the answer is, it's not really all that important, right? But, anything better than negative 2 isn't but terrible. And then we're focusing on revenue, and you want me 1.3 billion would be great, right? 1.3 billion would be good. Anything above that would be positive this time of year and everything, right? And it might be possible because of all the partnerships, even though we're not necessarily going to see the whole entire business transition the way, unrealistic people expect it to, just because they've heard about the story 4 times over carrots and peas one day. No, it's like, actually it has to change, and it's a big thing, and it takes a while, and they've done a really good job of it. But part of the they achieve traction towards these goals is via partnerships and whatnot, and they've got some good ones on the go, and want to hear more information about that, and we think that'll contribute to the revenue. And we think that's positive. So that was that question. What was the other ones? That was the main ones? That was the main ones. And then other things, people were asking me about other videos other people have been making about stuff on that. I don't know, because I don't watch other people's videos on stuff like that all that much. What do I think with regards to China? Like, Rocky's Outcrop's got the best take on China, and that by a mile. And his take on it is that potentially tech has or will be soon bottoming out. There's the directives with regards to American investors not being able to invest in or fund companies listed in America or elsewhere that provide funding to the Chinese military industrial complex, which is like rather ironic, but fair enough, right? You're in charge, you make the rules, and that's the rules. So those directives are rearing their head again over the next couple of days, and people say that that's got a correlation to the GME moves and the AMC moves and whatnot, and it's like, sound, that's all well and good, maybe it does, maybe it doesn't, but I call price action all the time here on the charts every day, and that's a high correlation with, and a very high success rate. And so it's not arrogance or that, it's because I've got better, more up to the date, more accurate information that actually is reliable and useful, which I use. So I don't need to check whatever some other video somebody else has made, or some theory that's likely been proved wrong by someone else anyway, anytime. So that was that. And what else? Yeah, the other videos with regards to people getting excited about prices going crazy, and that, and like, obviously, so a couple of people sent me a message about one particular person who was excited about price action and got really over the top excited about it, and then was wrong and whatnot and stuff. And like, I don't really care to criticize other people. Like, everybody gets it wrong all the time, other than Norky and I. So, and that's just the way it is. Whatever, people get it wrong, that's fine, I don't care. 15-minute time frame, as long as they're not costing everybody money, which they fucking are, and right, I do care sometimes when I think about it, but I'm not going to think about it because I'm not stupid enough to take some other people seriously anyway in the first instance. So it's not, anyway, right, whatever, right. So this is a very negative candle here. We're coming down at the lows of the day again. We've got a rejection wick on this candle. It was 15 minutes, and the 30 minutes we've now not had a sell signal. That's rejection from the center line. We haven't got across in the MACD. It looks like we're going to start this negative picture we see on the histogram may be continuation, in which case the 30 minutes will lead into like this downtrend turn into what we see on the hourly, this flag breaking this lower side of potential, hopefully a wedge, but the tightening idea of it isn't coming true at the minute. 1, 2, 3 touches to the top side. You're kind of looking for a touch on the lower side anyway. As you can see on this hourly, the Bollinger Bands have started flipping down here. You have a little bit of an expansion that might lead to an increase in volatility. The ATR short push to the top side, and then you've got like a new print there on the MACD on the histogram saying that you are expecting continuation again. Then after that, momentum seemed to potentially be weakening at the top side, and that comes in from the 30 minutes, 15 minutes, and hourly closes on price action. We've got 40 minutes in, so another 5, and you could start saying that perhaps the opening range had finished, in which point you might get a cue towards the end of the day where the range might persist, right? So you've got your cross on the MACD on the hourly. That's just continuation expected here. The ATR is pointing to the top side. These are rejection candles from a number of reasons. The chart formations, the horizontal levels, and the Fibonacci's. I know you put in a potential green flash on the hourly here every so often. There's 20 minutes left on it, and I would anticipate that being a negative close with that huge rejection wick on the top side. That would like lead into continuation, talking about 2 hours, and then here like the candlesticks are quite clean, clear, crisp. 200 period moving average is a rejection from this area so far. 50 simples are currently at 104. You don't want price action breaking down quickly below the Bollinger Band basis line, because then the 50 simple might not catch it, and you'd be looking in for a test of this sort of horizontal level, bottom side of the Bollinger Bands, and that'd be down below $100, even below 90. And that's all possible. It could happen today if there's a big breakdown, because of the range here. You know, there was one horizontal level, you tested it on the way up, right? But apart from that, which is your first port of call at 113, that's where you're looking for it to hold. That's below the basis line here on the 2-hour Bollinger Band. Not put much emphasis on that really, but the 1 hour, you can see you're in it around the bottom side. It's started to point down. If you trace that down, then the 200 period moving average on the 1 hour time frame could easily provide support. That's also in there at 113. And with the 50 simple coming up for a cross, you know, it's like this is like a little bit of a magnetar attracting price action to it, especially when you're already trending in that direction on the chart formation that you've currently put in. And that would be confluent with a potential bullish move to the top side, as well as suiting the bearish agenda. Then you can see that, like, why would it be, you know, the path of least resistance is towards 113, right? Unfortunately, or fortunately, because, you know, that's where I may or may not have orders in on leaps. Who knows, right? I don't. It's holding. I don't know, because I put the order in before I went live, so I actually literally don't know. And then, you know, did I even do that? I don't know, because I shouldn't have said that sort of stuff. So who knows? Is holding options through the split advisable? Well, I mean, I just said that, didn't I? But, you know, probably not. Will liquidity dry up at certain post-split strikes? Quite possibly, and that would lead to big spikes in price action. You know, so, you know, maybe. Then it's difficult to give financial advice, isn't it? You know, you'd have to be managing if you're looking at option contracts, and you'd be managing your account quite diligently, right? You'll be closing it quite quickly and acting quite reflexively. No one knows. That's a great answer, says Luke Spears. That's a great answer. No one knows. And so, you know, if shit happened that was brilliant, it'd be great to take advantage of it there and then. That's what I would say. But shit's costs. It costs money, right? To drink whiskey or play cricket or something. Does it? Does playing cricket cost money? God, eh. Anyway, so yeah, no one knows. No one knows. But it's a good question. Is it advisable? Definitely not, right? No, right? Definitely not advisable. This is not, there is no advice. No advice. I've got no advice. I've got some advice, right? When you wake up in the morning and you're like, that's comfortable, don't roll over and go back to bed or go back to sleep, but instead get up and do the work of a human being. No one knows. Volatility pretty high for call buying. It is for darn tooting it is. So you want to get those leaps too, don't you? You want to be getting those leaps, you know. There that would be that or your Luke's had good advice recently as well on the same topic about selling puts. You know, there's different risk profile there, and you obviously have to. You don't want to be exposed to any issues and whatnot. So if you don't understand what you're doing with options, then definitely don't piss around with them. And if you do take anything, you want to take things that, you know, just investigate that the only thing you're possibly going to be losing is your premium. So be careful with that. And then don't trade options. Great. That's the way I'd be happy. That'd be great. And then if you do it anyway, remember I said don't do it, and then get leaps. And then don't buy things that are like expiring within the next couple of months unless you're happy to throw the money away, right? Literally happy to throw the money away, or can see something very positive that's about to happen any minute now, bing bong, wink wink, nudge nudge, right? Which is like not financial advice again. So, you know, there's all these things, and you know, I really hate it when people lose money though, that's for sure. So don't trade options. That's my advice. And yeah. So, but I can tell you this looks like a potential bull flag. And I can also tell you there'll be adjusted charts subsequent to the split. So they'll come in and we'll see that the price action is all being adjusted. So that, like, you know, if it was once $122, say that was sometime in the past, right? People would, you know, you speak to someone a couple of years ago, GameStop's $120, they'd punch you in the face and say you're a liar. But anyway, so let's say it was, right? Oh, look, it is right now. So, and then there was a split and it was 3-1 in price action. Subsequently was $40, right? Then because of the split, then those previous charts, they'll be adjusted down the ways. They'll be adjusted too, so those previous price action, like adjusted charts, right? So there wasn't huge, big, nasty artifacts, and you'd be able to do your charting across the same asset, which is super weird when you see things not do that. Like they launch like that joke coin Luna, right? What else are we talking about? Don't you kick your granny when she's shaving? Yeah, never kick your granny when she's shaving. Never kick your granny when she's shaving. There's a top tip there. Really good one, in fact. So 122 price actions. Oh, collapsing. Why? Woe is me. What's Tesla doing? Here, rejection from 236. Here, boy. Here, boy, is rejection from 236 there. VIX, the SPY doing is. Ooh. He's just there. So, backwardization back on the cards in Bitcoin land. Aim for the golden pocket here. Hi, Coco. How are you doing? How did you escape from behind the blinds? And how did I not notice? Coco, how did that happen? SPY nosediving. Yes, a little bit of nosedive there. It wants to come back in and test those lovely... What was it we said it was testing? It'll be up here on like this. Right? No, that's not SPY. It's Bitcoin. SPY. Yes. It wants to do this. It really wants to do that. Don't you, SPY? But like, yeah, maybe it wants to do that. It certainly... could go for that D. This could be the reaction from this previous low, the top side of the PRZ, but we're actually looking for reversal. Okay, I'll let you back in, Coco. Get in your box then. Right, so that was great, right? I think we did a great video. We'll be back later on for the live streams, right? Did we cover it all? Did everybody, we answered the questions that was asked, Thinksios, and when's the best time to buy GME? That's the question I regularly get, and the time is obviously any minute now, guys. Any minute now is the best time. And then when's what's going to happen? Any minute now, guys. Any minute, you know. Also that, did I talk more about AMC? Did a bit about AMC, right? Down 5% on the day. This lows we're looking for. You don't hold the 236, the golden pocket in at around 12 bucks and change. It's down at 13.56 of the low so far today, pushing towards that price at the minute. Lost the 236 there. Previously, what were we looking at on the 15-minute time frame? It was like somewhere, where was it? In around here or something? Or was it this one? It must have been, it can't have been that long ago. Wait a minute. It was only earlier on. This is right anyway. So, it's been rejected from there. You're looking for the 200 period moving average in the golden pocket in around 12.20. So that's that. GME, we spoke about this. That's rejection continuation there. 121.40. It's down at the lows of the day there. Just putting them in. Oh no. Bottom Bollinger Band. This is this idea of a wedge. You see it on the smaller term time frames. 15 minutes easily get a bounce and still like rejection from the 8 period exponential. Follow that down. The basis line from the Bollinger Bands. Follow that down. Or 50 simple, follow that down. They'd be all higher targets within this formation, but still lower than this previous oscillation. And you've just recently put in this low, which is lower than this previous low. It isn't bullishly divergent. You failed to get back above the center line in this time frame subsequently, and you'd be hoping for price action to bounce here. But hope isn't very good, right? It's not very good when you're trying to use it for anything. Unfortunately, I've noticed. Whereas in our effort there, on the other hand, so the 200 period moving average, which is what that speaks to, much more than hope, is down there at 100 and teens and maybe just 110. So what does that take us back to this channel in the 1 hour time frame and looking about where would it be price action meets that? Should it be at the lower side of this channel? Should it be in advance of that? The sooner it happens the better in one sense, but then it breaks this formation. But then you get to the 200 period moving average quicker, and if you're on an early time frame, that gives you plenty of time to recover should it be a rejection and this be true support. And you want a test of support, right? Even if price action doesn't hold it, you want to test it. I'd rather find out now than in about, in any other time later on, right? I want to know now. Every time there's information, I want to know it now, right? And that must be the way, if price action had a feeling, right? And it was somebody asked it, what do you think of down there? It'd be well, I want to know right now. I'm going to go and test it. And what do you think about up there? Well, I want to know right now. Right. So, you can get these, but you can find out, right? Because it's this, people don't realize, but how does Tradespotting know where price action is going? It's because I read it in a book, right? I went to the story depository, and you should always remember